Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of October 28th through November 1st. We're in part one of our weekly trading game plan. We'll try to help you see if we're going to get a trick or a treat from the stock markets this week. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of October 28th through November 1st. We keep our notes in publicly accessible Google documents. Our notes documents contain links to bonus videos to the tools and resources we use to do our market analysis, come up with our trading strategies, trading ideas for the week, and you can find a direct link to this Google document in the description box below. We keep all of our weekly trading game plan notes, Google documents in a publicly accessible Google Drive folder so you can refer back to the notes for this week, as well as previous weekly trading game plans. And again, you can find a direct link to that publicly accessible Google Drive folder in the description box below. Good morning, Fairchild. Thank you for joining us in the chat today. Hope you had a great trading week and are doing well. So firstly, we'll take a look at how the markets ended up on Friday. Go to the main page in FinViz. You see the Dow was down 0.61%, NASDAQ up 0.56%, S&P pretty flat, just negative at the end, 0.03%. So we had 37% advancers, 58% decliners. We had 68% new highs, 32% new lows. Now we've got about a 50-50 split, 52-48 above their 50-day moving average. Still got 64% above their 200-day, 36% below. So we see the markets started up and then trailed off towards the end of the day. NASDAQ holding on to a small gain, but overall bearish day on Friday. Again, it was a Mag 7 day, mostly driven by Tesla. Tesla reported better than expected earnings, drove the NASDAQ up after those earnings were released, I believe, on Wednesday. So Thursday, Friday, we had a NASDAQ rally. Again, saw a rotation back into the Mag 7, into some semiconductors on Friday, out of defensives, out of financials, industrials, consumer defensives, and then again, a Mag 7 rotation into the Mag 7. Some news: NVIDIA overtakes Apple. Home buyers hold off. Markets moving in mysterious ways. NASDAQ finishes higher while Dow slips. Says NASDAQ hit new all-time high on Friday. See oil popped up, now above 70, popped up around 72. It's now sitting in the mid 71s, got plenty of support at 70. NASDAQ looks like the futures rolled over, so the new futures contracts are showing above 3. Gold continues to be a beast, making new all-time highs, now above 2750, 2760. Dow and S&P futures pointing negative, NASDAQ futures pointing positive, and the Russell also negative. Bonds, we saw the 30-year actually was up above 4.5, finished just below 4.5. That 4.5 yield is a critical level for, in the past, stocks have sold off when that 30-year went up above 4.5. So we saw a significant increase in bond yields. Not inverted, but very steep, very big pop in bond yields, drop in bond prices. Bitcoin did have a bit of a decline down to 67, 66. Welcome, Sydney Osborne. Thank you for joining us. Hope you had a great trading week. So if we look at the screeners of the major indices and the technology components, and just a quick reminder, you can also access these screeners in our notes and in the screener sheets of our ETFs and Watchlist Google Sheets. So again, all of our content should be considered for education and entertainment purposes only. None of this is financial advice. We're not financial advisors. Again, all of our content should be considered for education and entertainment purposes only. But in my humble opinion, I think particularly after the Tesla earnings, we're seeing a rotation from the Dow and S&P that were making all-time highs back into tech, back into the NASDAQ. So we see NASDAQ's playing catch up. It said in the news that it made an all-time high. Looks like it's just very close to that pre-August, July high. So again, catch up in the NASDAQ, rotation out of the Dow coming down to its short-term moving average, a little bit less so out of the S&P, but it did break below that trend line. It's got some room above that near-term moving average. So again, for now, we're seeing a rotation out of the Dow, out of the S&P, into the NASDAQ. Again, IWM, the Russells are going to be very sensitive to bond yields, interest rates. So we saw a steep decline in the Russell back down to its near-term moving average. In my humble opinion, again, on that pop in bond yields and interest rates. We look at a breakdown of the technology components. See, ARC got a little bit of a pop, probably on that slight decline in bond yields, interest rates. See, the FANGs really aren't going anywhere, just chopping around flat. Still got a significant room above its moving average, still significantly below the July high. So even though we saw that rotation in the Mag 7 on Friday, they're not really driving the overall market. Biotechs, again, sensitive to interest rates, bond yields, so they've declined, hovering now below that lower trend line, hovering around the 200-day moving average. So again, very sensitive to interest rates, bond yields. So until we get a decline in bond yields, I don't expect biotechs to go anywhere. Similarly, semiconductors aren't really going anywhere. They're just sitting at that 50-day moving average, got resistance from that upper trend line. Again, I don't suspect semiconductors are going to move much until we get some significant earnings like NVIDIA. The TQs is just leveraged on the NASDAQ, leveraged on the Qs, so it behaves the same way. Again, we see the broader technology market pretty flat as well, just chopping up and down. It's got this support, this pivot point. It's just bouncing off of that, chopping up. So again, not a whole lot of direction in the broader technology market. We'll see if that changes again with the rotation that we're seeing out of the Dow and the S&P back into semiconductor, or not semiconductors, into technology. So if we look at the groups, sectors, and industries in FinViz, see Friday, again, rotation into the Mag 7, communication services, technology, consumer cyclical, and Tesla, I believe, is in that sector. Also back into energy, so I'll pop back up into oil a little bit, and out of sectors like utilities, financial, real estate, defensives. The bottoms are all sensitive to bond yields, interest rates. Welcome, Easy Mike, Katon. Hope you had a great week. Hope you had a great trip to LA. Are you still in LA or are you back? Thank you for joining us. So for the week, again, we see cyclicals. That's probably mostly Tesla, some communication services, some technology, but otherwise generally red. Least red is energy, healthcare, most negative industrials. Again, we're seeing a rotation out of industrials into technology, out of materials. So gold and silver did retrace some. For the month, the best performers been energy, technology, and financials. The worst, healthcare, and materials, and defensives. So again, we're rotating more back into technology, more so into a risk on, and we'll see if any tricks or treats appear that change that trend. Industry-wise, see solar had a rebound, again, probably on a retracement in the bond yields, trucking, oil, bounce back, some REITs. Most negative, uranium just slightly negative. Looks like uranium's slowly cycling back down. We'll see if that continues. Real estate generally negative. Gold and silver, so this would be the stocks, the miners, mostly negative. Most of the REITs negative. Luxury goods, again, they canceled that Tapestry merger, got blocked, so it hit luxury goods, I'm sure. Medical care facilities, very negative. For the week, silver was positive. Utilities, some utilities, renewable utilities, some REITs, some oil. Solar negative for the week. Most REITs pretty negative. Again, pop up in bond yields, interest rates. Again, that's going to hit real estate, hit the REITs. Steel, pretty negative. Uranium, again, we're seeing that cycle back down. Uranium, again, we'll see if that continues, gives us some opportunities in the future. Pharmaceuticals, negative. For the month, though, uranium, silver, very positive. Oil, positive. REITs, generally positive. Solar extremely negative for the month. So again, we see solar very volatile based on interest rates. Okay, let me grab a quick drink. We'll open up the economic calendar in investing.com. We'll look at the important economic data from last week, look forward to important economic data coming up for next week. Just a quick reminder, as the important economic data or news comes out, try to capture that as quickly as possible and post it in the Surf the Markets channel of our Discord. Again, our Discord's free to join. You can find a free invite in the description box below. So again, as the important economic data comes out, I try to capture, screenshot the raw data from investing.com, post it in the Surf the Markets channel of our Discord. Also important economic news. So again, join our Discord. Great way to get real-time important economic data and news. We also have all kinds of channels where you can discuss different trading ideas, trading styles, trading assets. And again, y'all can discuss trading 24/7 in our Discord. So again, we'd love to have you join, actively participate, and we look forward to seeing you there. So again, let me grab a quick drink and we'll go over the highlights of economic data from last week and then look at the important economic data for next week. Okay, so just very quickly, some of the highlights from the economic data from last week. Not a whole lot Monday through Wednesday. Thursday, we got building permits, a little worse than expected. Again, 10-year bond yields popping up is going to hurt the building home market. And we got jobless claims, the weekly jobless claims data. Initial claims was less than expected. Continuing claims a little bit higher than expected. 4-week average is pretty stable, so this was viewed pretty positively in terms of the jobs market. But again, evidence that the jobs market's not deteriorating means the Fed doesn't need to cut rates. Whether they do or not is another story. But the data says, jobs market is not deteriorating rapidly, so no need to cut rates due to the employment rate. Friday, we got some durable goods orders were better than expected. And we got Michigan sentiment, and this was relatively positive as well. This was the final October read. And you can see that the 1-year expectations went down a little bit to 2.7. The 5 years still sitting at 3, so I'm sure the Fed would like to see that drop into the 2s. Consumer expectations improved slightly, sentiment improved slightly, and conditions improved slightly. So again, consumer sentiment improved, and again, we'll see that reaction in both the bond yields and the markets. That was viewed positively, but also again, not a reason for the Fed to be cutting. So interest rates, you can see the reaction in the Treasuries bounced the yields back up into that 4.5 range. So look at the other important economic data from last week. Okay, we've got Fed officials talking, so we'll hear what they think of this economic data, how that might impact their decision the following week to cut or stay. So mortgage rates steady, at least last week. Home sales negative, but better than previous. Again, existing home sales negative, again, higher yields, higher interest rates, going to be negative for home sales. Building permits, again, negative. Talked about initial jobless claims. Global services PMI better than expected. There's some new home sales, a little better. Natural gas storage up more than expected, but again, we see the futures going forward have higher natural gas prices. Talked about durable goods and sentiment data. Oil rig count down a little bit. So again, overall rig count steady. So again, we saw oil bounce up to about 72 or so. Got the data coming up for next week. Actually got quite a bit of data coming up next week. So that's one of the sources of potential tricks or treats in the stock market we'll talk about. It's got housing prices. We'll see if that inflation in the housing market's coming down any. We got JOLTS job openings. So again, important going into the Fed meeting. How balanced is the job market? Wednesday, we've got mortgage rates. Then we've got ADP non-farm, GDP data, core PCE data. So again, starting on Wednesday, we've got some significant economic data that again might give us some tricks or some treats in the markets starting Wednesday. Then Thursday, we've got challenger job cuts and the weekly jobless data and more core PCE data. So again, important going into the Fed meeting. Again, I believe this will be the last important data before their Fed meeting the following week. Then Friday, we get the non-farm payrolls. So again, a ton of very important economic data that will be the inputs to the Fed making their decision whether they're going to cut interest rates or hold them steady on November 6th and 7th. So also, we're in the heart of earnings, and you can see the whole earnings calendar here in investing.com. I'd highly recommend you go through the earnings calendar for next week, see if there's earnings that would impact your trading, anything you're looking to buy, hold, etc. Some of the highlights, I'm not going to go through the whole list there, but I'd highly recommend you keep an eye on that. What sector, what kind of sentiment we see forward, etc. Tons of important earnings next week. Some of the highlights, some of the Mag 7s so far. We've had Tesla. I believe we had Netflix as well. But Tuesday we've got Google. Wednesday we've got Microsoft and Meta or Facebook. Thursday we've got Apple and Amazon. So I think the only outstanding Mag 7 will probably be NVIDIA. Also got some big healthcare, I think Lilly, etc. So again, a ton of very important earnings. This is again another source of potential tricks or treats in the market. We can see, earnings definitely matter. not only their earnings, but their guidance going forward. Also, particularly with the Mag 7s, the cloud providers, it's gonna be important, their cloud growth, their AI growth. Are they making any money on AI, particularly like Microsoft, Meta, Amazon, somewhat, Apple, how's the rollout of their Apple Intelligence, etc. So again, focus on AI. Are they making any money? What's their expenditure, their capex on AI? And that could have a ripple effect, throughout the technology sector as well as um, other AI stocks, etc., including potentially NVIDIA. So again, very important earnings. You can hear again how we trade around earnings in the link to our video on how to make money trading when earnings matter again. Also, we've got the election coming up on the 5th, and then the next FOMC meeting on the 6th or 7th. So again, plenty of potential sources for volatility coming up. Welcome to Crow, Gabe Fade, George K, Gerald Fitz. Thank you all for joining us today. Hope you all had a great trading week and are doing well. Okay, so let me grab a drink and we'll go over the market screen in Webull. Just very quickly, you can see that Webull is now offering 40 free fractional shares of stock. If you open and fund an account in Webull, we use Webull for our market analysis, due diligence, the majority of our trading. And if you open and fund your account now, and you can get up to 40 free fractional shares with only a deposit of $2,000 or more. Below 2,000, you get 20 free fractional shares, each worth $3,000 to $3,000. So if you're not already using Webull, we'd love it if you'd use our affiliate link in the description box below. Get your free fractional shares of stock and all the other benefits, other promotions they may have at the time. I'm using the market screen in the online browser version of Webull. So firstly, if we look at the histogram of advancers and decliners, we can see on Friday we had a lot more decliners, a small decline than advancers. But again, the percentage of advancement was also very small. We saw generally, most of the indices were down except for the NASDAQ. It was interesting, this inflow, as we saw positive inflow all day in the NASDAQ, which is a rarity on Friday, and we saw negative outflow out of the NYSE except for early in the morning. You'll see a lot of that shift. It looks like about 10 o'clock, that consumer sentiment data. I think that sent the NYSE down. So again, not typical. Typically, we see NYSE up, NASDAQ down on Friday. So that shows our strength, the rotation back into the NASDAQ. Also, I think we'll start looking at this market sentiment on a regular basis. And now that that's a new feature in the Webull market screens, we can see right now market sentiment is neutral. If we go back in the history, we can see that it's declined from a greed setting over the past week. And again, now we're basically neutral. So about a month ago, it was greedy, and now we're pretty neutral. So I don't know if that says traders are ready for tricks or treats, or if we might get a potential scare if we get a trick. Again, you can also see the earnings calendar in the market screen in Webull. So if you hit the calendar, go to the next week. And then you can go day by day. So that's how I kind of saw Microsoft and Facebook. We're both on Wednesday. So you can see what time they're going to report, their forecast, etc. So very important upcoming earnings you can also see in that calendar in Webull. We look at the best performing industries for the week. Geez, Bayer is an outlier. Automotive, actually mostly negative. Education, again, mostly negative. Semiconductors, pretty split. Food and drug retail, negative. Out of the consumer segments, although they show slightly positive, it looks like, very specific ones because the majority are negative. Coal split. Real estate, again, mostly negative. Oil and gas, pretty balanced, but slightly negative. And oil and gas, textiles, so a lot of negativity. Look at the best the top ETFs, most popular ETFs for the week or for Friday. So down on the Dow, up on the NASDAQ. It's probably short on mid caps. So again, down on the Dow, down on mid caps, up on the NASDAQ. So again, we're seeing that sector rotation out of the Dow and S&P into the NASDAQ. Up on the VIX, inverse, so down on Bitcoin and up on the VIX. Those are shorts on small caps, so down on the Russell. So industries, industrials, pretty split. Healthcare mostly negative, financial negative, real estate negative, energy positive, utilities negative, tech. So again, rotation out of your defensive sectors back into technology. Basic materials pretty balanced. Looks like lithium. Again, a rotation out of defensives into technology, into risk on. Palladium, oil, palladium, natural gas, oil. Okay, next we'll look at the futures in FinViz. Just a quick reminder, you can now also trade futures in Webull, and you can see a discussion and a previous promotion of futures trading in Webull via the link to the discussion topic in our Discord. Okay, if we look at the futures in FinViz, can we see that rotation out of the Dow, less so out of the S&P, into the NASDAQ, out of the Russell, also the foreign markets. Nikkei rolled over, headed down, looks like it's got some support. Euro looks like it's got some support as well. DAX, pretty flat. The VIX, I also want to look at the VIX term structure. So we see it had declined, bounced up slightly. So again, just a quick reminder, you can find the link to the VIX term structure tool in the link section of our homepage, beachbumtrading.com, bum without the U. So again, it was interesting. The November month is now below the current VIX, so the current VIX is in the 20s. and the October month is only 19.9. See how low December is. Also, we get a little pop up, and then the futures kind of trend up, but they're all in the 19s now going forward into next year. And we see they're slightly increasing going next year. So again, interesting. We'll see if that December pulls up and we get out of a backwardation situation in the VIX. But again, the futures are still below the current VIX. So hope that helps. And again, you can find this link under the reference links section of our on our homepage, beachbumtrading.com, bum without the U. So I've started using that a lot more during the day too to see where the current VIX is relative to the futures. So we saw oil again popped up around 72. It's got plenty of support about 70, just kind of chopping in that range. Natural gas, again, that must be a futures rollover, but we see the next month futures are showing it at 3. So we'll see if it trends up or retraces to fill that gap. Gold, again, continues to make all-time highs. Now got support at 2750. Probably make a run for that 2800. Silver, I think it topped out at 35. I think that's a pretty good resistance level. So again, we've got, so the Crow was mentioning some of the leveraged ETFs we use to trade gold and silver. So GDXU, long, GDXD shorts, actually gold miners, silver, AGQ long, ZSL short. So again, you can make plenty of money short-term trading using these leveraged ETFs. And we'll see those in our ETFs Google Sheet as well. Again, palladium had a strong run, platinum had a strong run. Corn looks like it topped out and rolled over. Wheat's been trending down, so it's down below that 580. So again, it looks like it's slowly cycling back down. Probably take some time until we can get an opportunity there. But again, you can short the ETFs on wheat. The ETF we have is long, WEAT. And if you're able to short that directly, you can short that WEAT ETF. Sugar flattened out, lumber up a little bit. Yeah, we see a dramatic drop in bond prices, pop up in yields. Looks like it's bottoming out before the Fed even cut. So again, the bond market's not expecting any further cuts. In fact, it's back to where before the Fed cut at all. This might be an opportunity. So again, the Fed meeting coming up, they have said they want to cut more, like another 50 basis points this year. That may change. But again, I've been watching TLT. If TLT bottoms near that support level before the Fed rate cut, I might buy another chunk of TMF to play because again, we know the Fed's going to be cutting in the future. But the bond market has reacted like they're not. So again, dollar strengthened back up over 104. So all the foreign currencies back down. Again, I didn't hear any further news on the Bank of Japan increasing interest rates. And so that yen carry trade pretty much unwound. It's not quite back to where before they increased rates. But again, we'd expect that to pop back up at least a little bit when the BOJ increases rates again. So I hope that all helps. Okay, I'm gonna skip over our ETFs for now and come back to it, assuming we have enough time, see how many of the additions that we can cover. So I want to get to our theme strategies for this week, talk about that, and then we'll come back to ETFs and we can look at ETFs that we can use to also take advantage of other opportunities and potential tricks or treats that happen to come in the stock market this week. So we'll grab a drink and we'll talk about how we can make money trading any trick or treats we get from the stock market this week. Okay, again, our theme for this week is to see if we're going to get any trick or treat from the stock market this week and how we can make money trading, any tricks or treats that we might get from the stock market. So I just wanted to highlight some of my ideas as to what potential tricks or treats we might get from the stock market. And then again, we can talk about how we might potentially make money trading any of these tricks or treats. So firstly, um, related to the elections, if we happen to come out, if they come out with any October surprises for one candidate or any of the candidates that negatively or positively impact their probability to win, that may again be a source of volatility for the market. Last week we talked about trading, how to make money trading in October during the presidential election year, and you can see some of the sectors, industries that may favor one candidate or the other. So if we get one of these October surprises, it might impact those sectors um, negatively or positively related to that candidate. Also going forward, into the actual election. Um, the expectation is both for surprises and um, the election itself. Typically, volatility increases into the election, then we get a volatility crush once the election is decided. Um, but if the election is contested or it's unclear who the winners are going to be, then we might not get that volatility crush right after the election, and heightened volatility might continue. Also, if we get further escalations of war in the Middle East, now I did see some news that Israel had hit some Iranian military targets last night. So if that causes further escalation, again, that might impact the prices of oil as well as just increased volatility, increased tension overall. So we'll see if that continues. We talked about all the major economic data we have coming out next week. So if we get any negative surprises, that may again significantly trick the market. We might see a down, an October effect, October surprise in the market, downturn. Also, we've got significant earnings, the Mag 7, also some major healthcare. Like I said, I think Lilly and some other major healthcare stocks report. Um, if they report negative surprises, again, that may negatively impact particular sectors and or the market as a whole. Again, the Mag 7s are going to be critically important. They're so heavily weighted in the indices, in a lot of ETFs. So any surprise, negative surprise out of the Mag 7 could be a trick to the market. Now, on the other side, treats for the market, if we get positive economic data, it indicates the Fed might be more likely to cut. The market would probably like that. So if the inflation continues to come down, that would probably be positive. Um, so again, any positive surprises might be a treat for the market, and we'll continue to see that melt up through the end of October. Also positive earnings. So we saw Tesla beat earnings expectations and drove the NASDAQ up. Tesla, I think, was up 20%. So any other companies that report positive surprises drive not just their earnings, but also their sector and possibly even the indices. So again, you get positive surprises out of the Mag 7 if they're actually making money from AI, decreasing their capex, spending, etc. Again, that could easily drive the NASDAQ technology sector and possibly the whole markets up further. So love to hear your feedback. What other tricks or treats do you think we might get from the markets? How else do you think that we could react to both protect our profits and make money trading from any of these tricks or treats from the stock market? So again, please post your ideas in the comments to this video in our Discord, etc. Again, we'd love to hear, do you think we're going to get any tricks or treats from the stock market? And if so, how can we make money trading those tricks or treats from the stock market? So we've been talking for a while about how to make money trading in October. You can hear our previous discussions about how to make money trading in October, how the markets typically perform in October, what the October effect is. It's possible that one of these tricks or treats, one of these tricks might cause the historical October effect. We'll see. And you can hear about all those discussions via the links in our notes. Also trends in the fall. So again, we'll start talking about how to make money trading in November through the presidential election or the elections in general. Again, probably next week. But you can see the historical trends for the fall via the links in our notes. Okay, let me grab a drink and go back, and we'll go back and talk about our ETFs. So anybody in the chat has any other specific ETFs that you want to look at, you can throw those up in the chat. I'll try to keep an eye out for those. I do have a number of additions that I want to see how many we could cover today. We ran out of time last week, and I wasn't able to cover them last week. So try to get through as many of those as we can this week, and then we'll continue. Okay, just a quick reminder. Once we identify a trade idea, be it a long or short idea, we then jump over to our ETF's Google Sheet, and we can identify ETF with the risk reward profile, characteristics, composition that we'd like to use to trade that long or short trading idea. And you can do the same thing. You can use our ETF's Google Sheet as well as our other Google Sheets, etc., by joining our Patreon. Again, get 24/7 access to our Google Sheet. Now I've got a number of additions to the research sheet of our ETF Google Sheet. So I'll go through those first. So the first one that was mentioned a little while back by Easy Mike, Katon. So thank you again for pointing this one out. Katon is A1A. This is long on Asia, iShares Asia 50. So take a look at that one first. So again, you can go to our ETF's Google Sheet, whether the main tab, the ETFs tab, or the research sheet, do a find. So here's the Asia A1A, Asia 50 ETF. So you can see the risk reward profile for it is currently at 73. It's got a 52-week high of 77, so it's relatively high. It's got about a 1.5 risk to reward, 52-week risk to reward. Go on bottom to top, it's got about a 2.86. So if we look at it, FinViz first. So again, you can access the links to their profile in FinViz in the FinViz URL column, their composition or profile in the ETF database via the link in the ETF database. column, so we'll look at that as well. So we can see this is relatively high right now. It's been trending up very nicely. So again, it's had a nice uptrend. Looks like it does pay a dividend, like about 38 cents semi-annually. Dollar. It is optionable. Volume is relatively low. AUM's pretty large, so it's got plenty of investment. Composition, Taiwan Semi is the biggest holding, 25%, so it's definitely going to swing it. So it's got Tencent, Samsung, Alibaba, so you've got a mixture of Taiwanese, Chinese, Japanese, Korean. So it's a diverse Asia holding. Look at its composition, composed of the 50 largest Asian equities. So again, spread out through Asia, the largest companies. So if you're looking for, the largest large cap Asian companies, and you want to spread across all of Asia, looks like that's a pretty attractive ETF. We zoom out a little bit. Again, it's had a nice strong uptrend. Still got plenty of room to go. So looks like it's just breached its 50-month moving average. Plenty of support there. So again, it's got some good potential upside. Got some support down around 60 or so. If we look at its profile in the ETF database, so again, you can get additional information, you can get the holdings. So again, Taiwan Semi, etc. So Finviz got similar information. So I hope that all helps. Again, looks like a nice ETF if you want to trade broad Asia. It does look like it has some potential upside. That's still to go. And again, a mixture of China, Japan, Korea, Taiwan. Again, the biggest holdings, Taiwan Semi. So any news, etc., would obviously impact this A1A. So again, another way to trade Asia broad. So thank you again, Easy Mike, for sharing that one with us. So similarly, along the kind of similar theme of emerging markets, is I've got a couple that I identified from a video by the ETF Guide on emerging markets. These are both long, different ETFs long on emerging markets. So ABES and FRDM. So if we quickly take a look at those. So again, we saw Asia's trending up. There's several. China's looks like it potentially recovering, potentially. So I've got both of these in the research sheet of our ETFs Google Sheet. So under emerging markets, they're long, so you can see a nice comparison of ABES. This is Advantis Emerging Market Value Fund, and FRDM, Alpha Architect Freedom 100 Emerging Markets ETF. Again, you can see, compare their risk reward profiles. So very similar. Looks like 52-week. The FRDM's got a little bit higher. Bottom to top, FRDM's got a little bit higher risk to reward profile. We look at their profiles in Finviz. So again, we can see ABES been trending upward pretty nicely. It's like it pays a semi-annual dividend, about $48.30. So 3.6%. That one's not optionable. Volume's pretty low on that. AUM's pretty low. See the composition. So Cafe, so some China. Click some China. Li Auto, China. very small percentages, so it looks pretty diverse. Diverse group of companies related to emerging markets across market sectors, industries, groups, and countries. And all market capitalizations, at least 80% in equity securities related to emerging markets. So again, if you're looking for a pretty diverse emerging markets fund, ABES might be something that might be interesting. And we see it's been trending up nicely for quite some time. It's like it broke out and is retracing a little bit. Doesn't look like it's been out. It's only been out since probably 2021. Again, had a nice uptrend. So if we compare that one to FRDM, not as strong of an uptrend. So Alpha Architects Freedom 100 Emerging Markets ETF. This one looks a little bit flatter. It's like this has a quarterly dividend, 2.43%. This one is optionable. Again, volume's pretty low. AUM's a little bit better. The composition, so heavily in Taiwan Semi again, Samsung. So this looks similar to the composition of that A1A we looked at. So Freedom 100. %of the fund's total assets in component securities. The Freedom 100 Emerging Markets Index. So I believe they're, we can open it in ETF database, see what it says. Not a whole lot of additional information, but I believe their thesis is free markets. So I believe they would not have Chinese companies, as that would not be considered a free market. So they do have Taiwan, Korea, etc., but I don't believe you'll see any Chinese markets or like Iranian stocks or anything, because they're focused on free countries, free markets. So again, another option if you're looking for emerging markets. Got both ABES and FRDM, and you can see the risk reward profiles and pick one that's attractive for you. We do have others for emerging markets, so if I compare those also to some of the others we have. So we've talked about EMB in the past, so you can compare that to the risk reward profile for EMB. Also, if I see if we have others. So we've got a couple others, emerging markets, direction, leveraged. We've got a leveraged bull and short. So if you want to short the emerging markets, EDZ, long, EDC. So those are both direction leverage products on emerging markets. And then we've got another index fund. So again, you can compare ABES, FRDM to EMB and also to these EDC, BWO. And again, see the risk reward profiles comparison and pick the one that you would like in the direction. Again, we've got one if you want to short emerging markets, EDZ. I would love to hear your feedback on any of those. What do you think of ABES or FRDM compared to EMB or BWO, EDC, etc.? Do you think investing in emerging markets is a good trade idea right now? Please let us know. Okay, lastly, very quickly, I also found a couple new ones to trade leveraged on the Magnificent Seven. So when I was looking at some of the directions, I found a new pair to trade the Magnificent Seven, both long and short. So the long version is QU, short version is QD. You can find the risk reward profiles of both of those in the research sheet of our ETFs Google Sheet. We've also got MAGs. So MAGs was the one we previously had in our research sheet, and I believe that's also in our main sheet. So you can compare QQQU to MAGs, see the risk reward profile. So it's a little bit better, it's leveraged. So we see strong trend up, hasn't quite hit its July high. So looks like it pays a dividend quarterly, small, 0.042, so very small dividend. This is not optionable. Low, very low volume, very low AUM right now. Again, relatively new. Still, derivatives, so heaviest in NVIDIA, Tesla, Meta, Apple, again, Mag 7. So again, QQQD is going to be just the inverse of this. So I would use the top in QQQU to determine an entry in QQQD. So again, it pays a small dividend. It's not optionable. Again, very low volume, very low AUM. Again, relatively new. So these are going to be choppy, possibly a little bit gappy, illiquid. They're still small, relatively new. So you can see that's only a leverage -1, but is another way to short Mag 7. It's the only one we have to short the Mag 7 directly. So again, if the Mag 7 top out, that might be a opportunity to use an ETF to short the Mag 7. So let me know what you think of QQQU compared to MAGs and QQQD to short the Mag 7. If anyone's used those before, let us know how they work, your experience with those. So, okay, so those are all the new additions. And again, love to hear your feedback on what you think of these additions to our research sheet, to our ETFs Google Sheet. If you have any others you'd like us to do research on, please let us know in the comments or in our Discord. Tag us in our Discord. We're BeachBum Trading, all lowercase, no other characters, symbols, numbers, etc. Anyone else is an imposter, and we would not DM you or send you a friend request without letting you know in advance. We wouldn't try to sell you Bitcoin in our Discord. So again, anyone that does, please report them, ignore them. Again, let us know if you'd like us to look at any other ETFs, etc. So let me grab a quick drink, and if anybody else in the chat has any you want to quickly look at, we can do that. It's interesting, Gabe. I didn't know that people in the UK can't directly buy ETFs, can only trade options on them. Thank you for letting us know that. So for your information, Gabe, you can see whether an ETF in our ETFs Google Sheet is optionable. There's an optionable column, and if you wanted to filter and see which ETFs are optionable, you could just filter on the optionable column and see which ones are optionable. So I hope that helps. So again, you can then just see the ones that are optionable. So I see Easy Mike talking about volatility ETFs. We talked about, potential tricks or treats in the market. So look at the VIX ETFs that we have to long or short volatility. So UVXY, VXX to long. And then we talked about the potential volatility crush after the election. So opportunities to short. But again, if we get a trick and we get a contested election, volatility might not go down as expected right after the election. Talked about the yen. You see long or short the yen. Talked about these ETFs on silver. So again, I think there's resistance at silver at 35, short CSL, long AGQ. Also, I've been watching this, the volatility in solar with TAN. So it did bounce back up. It was making new 52-week lows. So again, another sector to watch for the election that we talked about last week. Got all the various ETFs to long and short the various technology components. So ARC, biotech, etc. Had several people talking about cannabis this week. So kind of keeping an eye on that. It's still up a little bit. MSOS, the leveraged ETF is MSOX. Volatility in China, yen and yang, yen long, yang short, or C-Web, K-Web, etc. We talked about oil, natural. Again, we talked emerging markets. Talked about the FANGs. We've also got FANG-U and FANG-D. Talked about gold, GDXU long, GDXD. We've also got several other alternatives, and we've got videos that compare these for long or short gold. Industrials, I think I was having a chat with Easy Mike comparing SIJ. You might want to compare SIJ, which is just a short on the industrial sector. See, it's risk reward 211 or so compared to SDOW. So again, if you want to short the Dow, compare that to SDOW. So again, SDOW has a little bit better risk reward, but again, that's going to be on the whole Dow, which has diverse sectors. If you want to short a particular sector like just the industrials, again, we have the SIJ to short the industrials. Just full disclosure, we're currently long SIJ, have been for probably too long. Talked about oil, natural gas. So again, if we see oil, natural gas trend up, long oil, short cold, or long UNL, UNG, long oil gush, or UCO, dividend payer USOI, or short drip, or SCO. And we've got longs and shorts on all the indices, on all the technology components. So again, if I missed something that you want to, ETF you want to take a look at, or again, if you want us to do, here's all the treasuries. So again, keep an eye on the bottom for TLT. If so, I might add to my TMF position. Got uranium, retracing slightly, but still relatively high. Utilities were down, so if you want to short utilities. So again, I hope that all helps. If there's, again, anything else you want us to look at, you can put that in the comments in our Discord, etc. If you want us to research them, etc., please let us know in advance. We can research them and discuss them in the future. So again, I hope that all helps. Also, we'd love your feedback on, what can we do to improve our weekly trading game plans, any of our other videos, our tools, our Google Sheets, our community, etc. Please put that in the comments to any of our videos, or again, tag us in our Discord. And we hope that you like this content. Please smash the like button on our videos. Help us try to get the Google algorithm to someday show us some love. and we really need your help to directly share our content, invite additional traders to join our Discord, join our live chats for our live streams, subscribe to our channel, and again, please repost our content on your social media sites, invite your fellow traders to come join the BeachBum trading community, and hopefully we can help them make money trading as well. So again, thank you for everyone that participated in the chat today, everyone that's watching after the fact. We hope that you'll come back tomorrow for part 2 of our weekly trading game plan for October 28th through November 1st, where we'll use all of our trading strategies, trade ideas, etc., to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also talk about how we can use dividend payers and several option strategies to generate income while we wait for our swing trading stocks to set up. So again, we hope to see you all back 10 a.m. on Sundays for part 2 of our weekly trading game plan. Thank you again for your participation and for watching, and have a great day.